All right. Well, thank you for coming. This week, I'm really excited to welcome someone whom I've been reading with great pleasure for a while, Guido Rossi. He's an associate professor in European legal history at the University of Edinburgh, where he focuses on legal history, especially the history of insurance law in the late medieval and early modern periods. Today, he's joining us from sunny Palermo. You may know that he's the author of a book that I would encourage you to read if you haven't already. It's published in 2016 by the Cambridge University Press, titled "The Insurance in Elizabethan England: The London Code." If even if you're just a contemporary 21st century American insurance lawyer, the similarities and differences between 16th century English insurance law and contemporary American insurance law are fascinating. And today he's going to be sharing with us a paper that is a part of that work. And before I hand it over to him to begin his presentation, I just want to advertise that in 2 weeks we'll have Sangmin Oh from the Chicago Booth School of Business presenting a paper on social inflation. So I hope you join us for that. And now I hand it over to Guido.
Thank you very much, Professor Pansing. Thank you, Travis, for this invitation. Thank you, everybody, for coming. And good afternoon or good evening, because here in Italy it's 9 p.m. So I will entertain you for a little over half an hour. Of course, I'm terrified because I see Professor Clark here, who knows way more than I can possibly pretend to know on the history of insurance. But nonetheless, the paper will try to give a very rough outline. So nothing, oh, sorry. You see, it's Professor Clark's presence inspires terror in me. I'm kidding, of course. I'm very glad to see. So, how to regulate a new insurance market in early modern Europe, the case of 16th century London. Um, Now, we had insurance at least from the middle of the 14th century. Insurance, as we know of it, roughly begins to appear in notarial records from that moment onwards. Actually, the very first policy we know of was made in between Genoa, for a route in between Genoa and the city where I'm talking from, Palermo. So it's roughly dated to the middle of the 14th century. Initially, we find it in Italy, then progressively it spreads towards Western Mediterranean in between, let's say, Italy and Spain. And then progressively it spreads across all the Mediterranean, then the Atlantic Ocean, and then it begins to appear in the Northern Sea. So basically, by the early 15th century, we have insurance all around Western Europe, England included. Now, I tried to sketch here some of the main insurance markets in between the late 15th century and the beginning of the 16th century. My geography is a bit rough, but I tried to give an idea. Here you find Venice, Genoa. There wasn't space enough for Florence, so I hope you can picture it in your mind. And then a series of other centers across Western Europe. We have to pay attention to England on the one hand, and here in modern day Belgium, to two cities, Bruges on the one hand and Antwerp on the other. We'll come back to that, but it's important to realize that they are very close to London. Southampton used to be the main insurance market in England till the 15th century, and progressively it loses out to London. which already was the main financial center of England. So what about English insurance? Um, we know of Lloyd's, we know of the coffee house where insurers would gather already from the second half of the 17th century. It was one of the main coffee houses, but it became particularly successful for a number of reasons. And by the middle of the 18th century, it was Lloyd's already, the Lloyd's we all know about. But what happens before Lloyd's? The earliest policies we know that were actually written in London date to the 1430s, but they were actually written in Italian by Italians. They are found in the archives of some bankers, some famous bankers of Milan who had branches all around Europe. The earliest policies we know which were written in English date to the beginning of the 16th century. This is the very first policy that we know of, at least, written in English. It's written 1523 and is a draft. Is a draft full of words striking out and plenty of additions. So it probably was a sort of an early experiment. But by the middle of the 16th century, insurances were commonly, routinely made in England. And by the middle of the 16th century, slightly after the middle of the century, London also had its own exchange, as you might know. This is an engraving, a famous engraving by Hollar in the middle of the 17th century. The date you find here, 1666, is not the date in which the engraving was made, but the date in which the exchange itself was destroyed. As you probably know, London was, well, a large part of London was destroyed during the so-called Great Fire or the London Fire on that year. And this evocative painting, painted 9 years after it, you can see in the center the old, well, you see the old London Bridge, you see the old St. Paul's Cathedral, and you see a very large chunk of London turning into ashes. The only thing here which is spared is a tower, a prison at the time. Prison, the Mint, and but no ordinary dwelling. So most homes were actually burned, and with them, nearly all commercial papers, all the commercial documentation about London was also turned into ashes. So how do we know about insurances, about the policy that were done in London before that time? The answer is a bit of a weird one, and the answer comes from this beautiful place. This is Florence. This is the palace of the Princess Corsini. You can see this is the river, the Arno, the river in Florence, and this is their very beautiful palace. These people, before becoming great nobles, were actually merchants, and some of them made a huge fortune in London in the late 16th century. Now, when the main merchant of this family, who was living in London, died in 1601, his heirs rushed to bring, of course, his corpse, his money, maybe in order of importance, you might say, of course, the uncle first, but the money second. It was a lot of money. They bought this palace and plenty of other lands. So they had an interest And more interesting to our purposes, they also brought back all the papers of their uncle. And this is why they survived the Great Fire. This is the archive inside the palace, the archive of the Corsini family. You can see that it's quite huge, it's pretty tall, and there we are. At the very end of the shelves, at the very top, in between ceilings, you see the ceilings, and the last shelf here, stacked in between, there's plenty of papers. This is all the documentation, all the papers coming from London in 1601, which someone placed there in the middle of the 18th century, and then nobody ever touched. And this is a huge archive. I wasn't able to actually take better pictures of the rooms, but each room is very huge, which means that, you know, if you think of all this place here in between the ceiling and the last shelf, it means that there's plenty of room for a lot of papers. Indeed, from the Corsini archive, we were able to find plenty of mercantile documentation, thousands, many thousands of mercantile papers, correspondence between merchants, account books, and among many other things, also over 40 insurance policies made in London. This is one of them. You see here in large characters, in the name of God, Amen. And then the policy begins. Here at the bottom, you see the underwritings of every individual insurer. Anyway, this is how we were able to find, this is how we know today the way in which insurance worked in London from the 16th century onwards. Now, the reason I wanted you to look at this policy is that English policies are remarkably, have a remarkable continuity in their wording. From the middle of the 1570s, the wording, the text of English policies becomes pretty much standard. It doesn't change anymore. This text is more or less identical to the first Lloyd's policy model of the late 18th century. There's very few insignificant differences, really, but the text is pretty much identical. In turn, the first Lloyd's policy model of the late 18th century is exactly the same as the policy prescribed by the Marine Insurance Act of the early 20th century. The only difference is in the name of God, Amen. The invocation of God was dropped out in the late 19th century, but nothing else changed. So basically, the 16th century policies we have now are exactly the same, look exactly identical to the policies used in the early 20th century in England. It's a continuity which, as far as I know, has no parallel in any other jurisdiction. So this paper is about the development of this insurance market and the problems it brings about. We are in the middle of the 16th century. In this period, there is a growing uncertainty as to the content of the insurance. Uncertainty, especially about the rules of insurance. Why is that? London initially follows customs of Italian merchants. As I told you, in the 15th century, we have insurances written in Italian, and that was still the case in the early 16th century. Even though the vast majority of the insurers were English, still the language used was Italian. So they would have to sign documents written in another language, which probably some of them did not understand very well. During the 16th century, there is a very strong influence, progressively dominant influence of Dutch, Flemish customs in particular, which were coming from the city of Antwerp in particular. These customs were sometimes different from the Italian customs, so they were new. And as a result of these new customs coming from abroad, there was a growing uncertainty as to which rules should be applied in any policy. Initially, merchants tried to give an answer to this uncertainty by asking other merchants what the custom is. But this proved to be a fiasco. Why? Because if you are an insurer, you will ask plenty of other merchants a favor. Please, can you write down with your name that such and such custom does not apply in London? The other merchants will probably sign it as a favor to you. But if you are the insured, you'll do the same thing, only asking other merchants that such and such custom apply in London. In other words, each party begins to gather a number of signatures in favor of his position about the applicable rules in any given time. And this fuels the chaos. So instead of providing more certainty, this way of asking other people a favor, sign my document, please, actually backfired in the long run. I'll give you just one example of one of such clauses. This is actually a case in which this system worked because this clause, which was coming from Antwerp, was accepted by the English market without too much of a fuss. In the space of 15 years, litigation abates on this specific point. Is the clause to whomsoever it may pertain. What's the purpose of it? The purpose is to be able to insure something which pertains, which belongs to someone else. So I can insure your car, basically, without disclosing who are you, which can be very useful in certain times. So today, you can appreciate its utility, but at the time, it was something very new and very dangerous for insurers. The first example we have is here. I have a transcription, but that is too long to read, so I'll skip it. What happens is that during a siege of an important city, Calais, at the time still in English hands, but we are in 1558, so the French are about to occupy this city. One Englishman, very smartly, decides to insure his belongings, his warehouse in Calais, under the name of a Dutchman, including in the insurance policy this clause to whomsoever the merchandise shall belong. Of course, the French arrive in the city, they take everything, they don't give back to the English merchants any of their properties. So the English merchant then asks the insurers to pay out. They say, no, this is a new clause. This is against our customs. We don't want to pay. So what the merchant does is asking a number of people. Here you see, this is a copy of the document. So the hand is one and the same for all signatures, but the original had all the different signatures. This insured party asks a number of leading merchants in London, these are important names in 16th century London, to sign his document attesting that this clause is a legitimate one and should be approved of. And better still, that is in use. Because the best way to prove a custom, even a new custom, is to say that a custom is old, even though it's the first time you see it. So we have growing uncertainty about the rules which should be applied, but also about the jurisdiction. Why is that? Because courts begin to smell money, basically, begin to see that there is money in insurance and begin to insist that they have jurisdiction on it. Traditionally, when merchants would quarrel, would dispute over an insurance policy, they would resort to a panel of arbitrators, fellow merchants who knew the customs and would settle the dispute in an equitable way. But in the middle of the 16th century already, we have different courts, each one claiming exclusive jurisdiction on insurance. Of them, in particular, two are very problematic to merchants. One is the Court of Admiralty, because it applies Roman law. The other is the King's Bench, because it applies common law. Neither legal system was used by the merchants at this stage to rule their policy, to underpin their policies. So both systems were alien to the merchants, and they didn't want them. They didn't want those rules applicable to insurance customs. So merchants would ask other courts, especially the government. At the time, you have to think of, well, the lack of separation of powers, obviously. So the executive power is also the highest judiciary court in the kingdom. So the best way to avoid other courts is to ask the government, the executive, please, can you rule on my dispute? Can you rule on this particular case as a law court? And this is what the merchants begin to do, increasingly do, in an attempt to avoid the other law courts, which are insisting on their mutually exclusive jurisdiction. So we begin to have a very problematic situation in the market. The rules are unclear, the jurisdiction is also unclear, and so nothing really is very clear. So at this point, the government comes up with a very smart idea. How do we give certainty to the business community? First of all, we have to write down the customs. Second of all, we have to set up an insurance court, which will decide not based on the common law, not based on Roman law, but based on the very same customs as the merchants are using. Then we require all policies to be registered. This way we can actually check their content and make sure that they are matching our customs. And finally, only the policies which are registered can be litigated before this new insurance court. So you see, the circle is closed in the mind, at least in the hopes of the government. This way, people will plead before this insurance court. The insurance court will use only mercantile customs. These customs are written down. Everybody's happy. This was the idea of the government. And the government begins to put this plan into action. In December 1574, the government, I'm saying the government, I should actually say the Privy Council, but maybe government is clearer, asks the mayor of London, write down all the customs you have about insurance. The government asks that several times, a number of times, because that was a very, very strange request. It was the first time the mayor was asked to write down the customs on anything, really. Actually, is the first time, as we know of, that a branch of the law in England is, so to say, codified, is written down in a coherent and systematic way. But that's only because the government insisted several times. 1.5 years later, by the summer of 1576, already a first draft of this compilation, or this code, if you like, was already ready, was written, and is preserved in a single copy in the British Library. A few years later, we have the second and more refined final version of this insurance code. by 1582 for sure. Here you can see the first page of the two versions. On the left you have the earlier one, and then you have the final one on your right. You see it's slightly more elaborated. You have short summaries for each article. First you have a summary of the article, and then you have the text. Now, how is it possible that London was so quick, that the merchants were so quick? The government asks for this code in December 1574, and 1.5 years later, only the first draft of the code is ready. This is the reason English merchants used as a blueprint what at the moment was the most advanced codification of insurance customs in Europe. This was, here we are, that's why I said we look at it again, the ordinances of the Spanish consulate in Bruges. So here, in truth, most of the Spanish merchants were already doing business in Antwerp, but for political reasons, I'll spare you the details, the consulate was still in Bruges. So actually everybody was in Antwerp. As far as I know, by that time, you had maybe one or two merchants left in Bruges, Spanish merchants left in Bruges. Everybody else was in Antwerp, but still, nominally, the consulate was in Bruges. Bruges was a very wealthy city in the 14th century, but by the late 15th century, it was already losing out to Antwerp, which is this city. And Antwerp, during the 16th century, was surely the commercial capital of Northern Europe. Now, I'll skip a few details. These ordinances, by the time they were enacted, they came into force on the 1st of January 1570, they were by far the most advanced set of rules on insurance all around Europe. They definitely were extremely well written. By the time, I mean, for the 16th century, it really was impressive. It was 147 ordinances distributed in 20 titles. Spain and England were not exactly best of friends in this period. Actually, Spain even tried a few years later to invade England. So really, they were not great pals, but only for a couple of years, from 1574 till 1576, relationships improved between Spain and England. And this is just the time in which London merchants needed a blueprint in order to write their own ordinances. For a very short time, Spanish merchants were allowed back in London, not only to actually do business in London, but they were allowed to use their own rules for any legal dispute arising in between them in London. We know this because one of the judges of Queen Elizabeth wrote to the Queen. He was really, really outraged. He was complaining that these Spaniards are using their own laws in England, meaning how do they dare doing this? So we actually know that during only this couple of years, they were using their own laws, their own rules. And on insurance matters, of course, their rules were the ordinances of their consulate in Bruges. This is how English merchants came to know of these rules so well. So, if we compare the English code, so to say, and the ordinances, the Spanish ordinances, we find that they are pretty similar, though far from identical. London merchants use the compilation, let's call it a Spanish compilation, to just for simplicity's sake, as a blueprint, because they had to write down their own customs, and it's way easier to have a model, to follow a model and change every now and then some things, rather than to start, out of a blue without any blueprint, having to imagine the whole thing by yourself. It's just way easier to copy something and change details rather than to start from scratches. So the scheme of the Spanish ordinances was used to provide a systematic treatment of most subjects on insurance. As to the substance, the Spanish customs, the Spanish ordinances were especially relied upon when English merchants didn't really have much to say about something. So when they were looking at a specific subject, they saw the way it worked in these Spanish ordinances. And then they thought, do we have anything in our customs? When they thought, no, we don't have anything, then they would copy what they found in the Spanish model. Otherwise, they would put their own rules. There is a significant influence of the Spanish compilation, but only for the first draft of the London compilation, so the 1576 one. The second version, on the contrary, went back to London tradition most of the times. But all in all, there are strong similarities between the two sets. So both, for instance, require 10% compulsory underinsurance. The reason was to prevent fraud. The idea behind it is that if you cannot insure the full value, surely you cannot over-insure your cargo. And so you're not tempted to sink it deliberately in order to cash the insurance money. And another subject in which both ordinances are very similar is that they both provide for life insurance. Life insurance at the time really was a new subject. These are two of the first compilations that actually say something about life insurance. And we can see that really life insurance stems from maritime insurance because it's modeled on time policies. For maritime insurance, the policy would say that the ship is allowed to go north and south, east and west one or more times. For life insurance, the policy would say that the body of the person, you don't insure the whole of the ship, but the body of the person, but everything else is the same. The body of the person is allowed to go up and down, left and right, one or more times. So they were exactly copying the maritime policies they could see and applying the same rules to the body, a living body, hopefully, for a particular amount of time. Just as time policies could be for no more than 1 year, so life policies could also be only for a maximum of 12 months, and so on. Now, trying to conclude, if we look carefully at the London compilation, we find, yes, that in many things it's fairly similar to the Spanish ordinances, but in truth, on a general level, all early modern compilations are fairly similar in terms of general rules. But if you look at the substance of its provisions, you find something strange. On the one hand, for some provisions, London is less restrictive. It gives more freedom to the insured. So one of these cases, for instance, is when it comes to giving a value to the cargo, to what you want to insure. The insurable value usually was the cost. So cost price. How much does it cost here? Say I want to send some a cargo of wool from England to Spain, from England to Italy. Um, what is the valuation of this cargo? How can I evaluate it? The answer for most customs across Europe was, well, you have to give the price which costs you to buy this wool. So the cost price. London, however, allowed the insured to choose in between the cost price or the value at destination. And of course, if you want to send this wool somewhere else, it's because you want to make a profit selling it there. So clearly, in the port of arrival, this merchandise will be much, much more expensive. So if you can insure at the value at destination, it's much better for you. And London is one of the very few centers, perhaps one of the very, very few, if not the only center, that allows explicitly to insure at the value at destination. So for some things, it's more it's more generous, it's less restrictive. For many other things, however, it is not. Often, its compilers don't trust much the insured. And you see that they actually don't trust the insured and require more stringent rules, more stringent several stringent rules, which really limit the freedom of contract and the freedom of the insured, because they don't trust the insured too much, or because they fear that the insured might collude with the shipmaster and actually plan a fraud on the insurers. Now, why do we have this very strange mix of trust and mistrust in the insured party? The reason is to be found in the market, in London market at the time. It's a young market. It's a market in which you don't have any professional underwriter. There is no professional insurer. So nobody specializes only in insurance. And what is the insured of today can easily become the insurer of tomorrow. So you can easily swap basically places. And in some policies, you find someone as insurer. In other policies, he is taking out insurance himself. It's a young market without specialized insurers that needs to be encouraged. In the eyes of the government and in the eyes of the compilers of these rules, this meant that the young market needed to be protected. So sometimes, for instance, in some of the new clauses which were coming from Antwerp, the compilers of this code grudgingly, well, accept them because they are by now routinely employed in London as well, but they say in the compilation, don't use it. They go as far as saying, for instance, in one of them, in this, the one I was showing you a moment ago, the clause to whomever it might pertain, they go as far as saying, well, don't do it. And if you really want to do it, well, the assurer is forewarned, meaning it's really risky. If you're stupid, well, go for it, but I told you so. So they were trying to protect the insurers because they wanted to foster this young market. And also they wanted to protect insurers because over the space of 20 or so years, there had been way too many changes already. And all this change was perceived as really not helping consolidating the market. But most of all, I think, the reason they were trying to protect the insurers is that the approach of insurers was really empirical. You can see here the number of insurers and the number of policies they would underwrite. Well, of course, we don't have all of them, but we have a good sample. And in this good sample, you can see that the vast majority only underwrote once. Insurers who underwrote 10 or more policies are really, really, really few. Very few people try their luck more than one or two times. And this is, to conclude, just an example or two examples of the approach of some insurers, or some of very few insurers who accepted to underwrite several policies. This is Mr. Marsh. Mr. Marsh insures in several policies the same amount of money, £50, which at the time is a lot of money. He, well, decreases a little bit his insurance in a policy of 1585, but then overconfident because things so far were going okay. These policies, as far as I know, didn't really have any mishap. There was no accident, nothing. Everything went smoothly. So emboldened by this string of successes, Mr. Marsh then doubles his usual bit. Instead of betting, basically, instead of insuring for covering £50, he decides to cover £100 in the risk. This is a lot, and here actually his good luck ceases, because we know that this policy didn't go well. The ship had a very serious mishap, and nearly all the cargo went lost. So after this unfortunate event, poor Mr. Marsh is no longer back to his usual £50. He's licking his wounds, and now he's willing to bet only less than £40. In other words, what you do is you carry on, and when things go well, like this other insurer, then slowly you begin to bet higher amounts of money. But the moment things turn sour, then you react basically with much smaller underwritings next time, because what you're doing in the end is only a wager. You are betting. There is no systematic approach to insurance. And if people are just betting, are hoping that things will go well, and if things go well, then they increase the amount of money they want to risk, then of course they have to be protected. And this is why this compilation was trying to warn the insurers and to protect them from themselves, even preventing them from doing something too risky sometimes. Now, what happens to this code? The code was used. We have some evidence that was in use during the late 17th century and the beginning of the 17th century. What happens then is that the insurance court, which was part and parcel of this plan of the government to improve things, began to decline. And progressively, people just ignored it and went otherwise to other courts to litigate their own insurance policies. So the insurance court falls into decline, and merchants keep on using these customs, but of course customs continue to evolve, to develop. So at some point, this codification, this compilation perhaps of insurance customs is no longer up to date. And what they do, instead of changing the obsolete parts, simply is setting it aside and no longer using it. Because for merchants who were using this code in the 16th century, this compilation was evidence of their customs, but not the source of those rules. So the moment the rules change, then this is no longer up-to-date evidence and can be safely set aside. And so during the 17th century, people begin to ignore this compilation till the end of the 17th century. Nobody really remembered it anymore at all. Even though, to conclude, this really is the first sort of quasi-codification of any branch of law, the law that took place in England. So thank you very much for your attention.
Great. Well, thank you for the presentation. We have time for a few questions, and the queue is open. I might jump in first, but if you'd like to get on the queue, you can use the little raise hand function or send me a chat. So this is perhaps a silly question that betrays my lack of understanding of the time, but why was it that, like, what was distinct about insurance as compared to other types of commercial transactions that led to the felt need for a special court and a special code? Like, was there a similar drive to have a special court for international commercial transactions, like the purchase and sale of wool, and a codification of the rules governing that, and if not, why was insurance treated differently?
Insurance was a very competitive business, not just within a single market, but also between different markets. It makes no difference to me if I insure my cargo in London or in New York or elsewhere. I only want to insure in the place in which conditions are better and institutionally things work best. So, for instance, in case of litigation, I want to be sure that the rules that I know of will be applied. I want to be sure that the insurers will pay out without making much fuss, and so on and so forth. I want to have, some guarantees. So if one market is not able to provide me with those guarantees, I will simply go elsewhere. It changes very little to me. And this we can see in many letters exchanged among merchants. They were asking each other, how is this market doing? Meaning, how reliable from an institutional point of view is this market? So should I insure here or should I go somewhere else? And this competition between markets really is what was, I think, one of the driving factors, and surely the reason behind the quick development of insurance customs across Europe. Simply, merchants would vote with their own feet. If one market doesn't work, you go and insure elsewhere.
Yeah, I mean, I guess the question though is why would that not be true of other types of contracts? Like, if you uh
Like banking, for example.
right.
Mm. Well, yeah, I was, yes, my answer was um, um, avoiding the big. It is a rather complex issue, so I was trying to sideline it, but but you caught me. Um, there's really is well, it's extremely a long answer would probably um, require 15 minutes, so I'll try to spare you one. But there is some uniformity also on banking customs as well. Actually, on banking customs, the uniformity is much stronger than on insurance. You probably have this set of rules where this changing sets of rules where you have a set of customs which are similar in different markets but not identical. If you were involved in the banking sector, for instance, it really made very little difference at all whether you were in London or in Paris or in Lyon or in Milan and so on and so forth, because they were following exactly the same rules, and the same practice was considered evidence pretty much everywhere. So it might be because of a uniformity that they didn't feel any need to write down different customs, because they were not changing from place to place. There was no competition among markets. That's a short question. Sorry, the short answer, but for a long question, we'll probably wait another moment.
Great. Jeffrey Clark. You're muted, Jeffrey. I can unmute you, I think. I can try. You're still muted. Technical difficulties. Peter, do you want to?
Yeah, so while Jeff's figuring that out, I can ask a naive historical question as opposed to a sophisticated one. So I'm just interested in the in your discussion about the "to whom it may belong" clause, and maybe you've partly answered this in your talk. The reading didn't make it so clear, but my question is really, why do you need to have a code handle that problem? Why can't you just let contract handle that problem? So if there's language that says we're going to insure this and we don't know who the actual owner is, like, okay, you shouldn't have agreed to that if you didn't want to be bound by it. And I don't see why custom or a code would necessarily be helpful. Now, you did say, well, we have to protect insurers because these are sort of one-off people who are just, doing this occasionally, and they may not be sophisticated enough. But after all, though, it sounded like they were all merchants themselves, so they may not be that familiar on the selling end, but they were insuring their own cargoes elsewhere, so that even if they were only participating in one policy as an insurer, they might be expected to know something about that from the other side. I'm just wondering why you think that needs to be codified at all. What is it about the way that market works that led people to think, oh, well, we have to write this down for once and for all for everybody, whereas just letting contract decide this, you can have it, you cannot have it, is not considered a good idea?
Thank you. That's an excellent question. We always have a friction in between two sides. The one side is the pacta sunt servanda principle. Whatever you agree upon, then you have to stick to it. So be careful what you are bargaining for, because then you have to keep your bargain on the one hand. On the other hand, there is a fairly strong pressure to apply the rules that people are accustomed with. So if you come up with a new rule, if you come up with a new agreement, two contracting parties come up with a new agreement, then it's possible to have this agreement quashed on the basis of its being against the customs. So this might seem very strange to us. It's very alien to our modern mentality, no doubt. But if you can prove that such and such agreement is against the common understanding, the common approach to the subject, then you are implicitly saying that it's unfair to hold the parties liable to it, because you can say there is an expectation in the market that such and such rules will apply or will not apply. So on one hand, you can say, well, but we come up with it, we bargain for it. That's our deal. You have to keep your deal. On the other side, you can say, and they did say, oh, but that is not really fair, because we've been always sticking to that different rule, and so this is our common understanding. You are going against our rules, against our mercantile tradition.
But that makes perfect sense to me if you're talking about a question of how to interpret language that's always been there. Like, well, this is ambiguous. We're going to give it the interpretation that most people have always given it. But if you're just putting in new language for the first time, it doesn't seem like, okay, there isn't a custom. We're just going to do this, and it means just what we said. It means that whoever owns this stuff, we're going to cover that no matter whether that person is named in the contract or not. It's not a question of whether the language is ambiguous and we don't know what the parties agreed to because they weren't sure. It just seems, I don't know, this is just obviously a modern bias or maybe a contract professor bias, but it just seems weird to me that you could say, well, I know you agreed to this and it's clear what you meant. It's just that, well, most people don't do it that way. So therefore you couldn't really have agreed to do that. It's unfair to you. But what's unfair about it? Why is that unfair?
The question at the end of the day is whether you can alter entirely the set of rules that should apply to a particular agreement by just agreeing with our counterparty. To us, modern lawyers, it should be straightforward. Sometimes it wasn't. There was a presumption that some rules should be applied, and perhaps the contracting party wasn't fully aware of the result of his bargain. So should you be able, should we have complete freedom of contract? Absolutely, but this is a rather modern thing. The way they were thinking wasn't that modern, if you like. Or the way some people were thinking, because obviously the party that always says, oh, but this is against our customs, is the party that's supposed to pay out. So whether they really believed in this argument or not is another matter, of course. But sometimes actually the party that would say this is against our customs was the party that would win the case. So maybe after all they were persuasive.
Fascinating. Okay, Jeffrey Clark, now unmuted.
Thank you. Thanks for bearing with me. I don't know what happened, but I'm back. First of all, Guido, I really enjoyed both your presentation and the paper upon which it's based. And it's just so wonderful to see this kind of very obscure, difficult period in English insurance history begin to get the kind of intense, granular treatment that begins to make sense out of what I think earlier historians have found to be a really perplexing period of, where insurance is becoming kind of more of a domesticated business, but it is, as you say, kind of having to coordinate with overseas markets. And I have like three really kind of almost, kind of trivial questions for you, but I thought I would maybe just kind of piggyback on Peter and maybe think about, maybe handle Peter's question in a way that you were kind of arguing towards the end of your paper, which is that, if you think about trying to enter into a kind of competition with overseas insurance markets, one technique, which is the one I think that you see operating within the insurance code, is this attempt to harmonize your rules with the rules in other markets to have a kind of convergent evolution, if you like, in order to maintain a kind of competitiveness that way, right? But of course, that's not the only way it can happen, because offering a more flexible a kind of environment for making your contract could also, there are liabilities and assets with each kind of technique, but you can see the game being played in another way as well, where the ability, say, in the London market to depart substantially from the more rigid codes that are operating in Antwerp might be seen as offering a real competitive advantage. And maybe in the year, 1590, it's not quite clear which is the better route to go, right? That's I can at least imagine that operating. I don't know if that's something that you would that's an approach you would concur with or not, Guido. Maybe I can give you an opportunity to respond.
Oh yeah, thank you very much. Well, of course, the big problem here is that we don't really have a regulator, someone who decides which rules to apply and which can be ignored and which can be improved in these that easily. So it's often a question of just the approach of a number of single transactions which eventually result in one custom or another. A real problem, however, was often for insurers and insured alike stay afloat. So often they might not realize fully that in order to have a better market, in order to have more liquidity in this market, and so on and so forth, you have to have more competitive rules. But they would clearly see the results of one market going well and another market not going well. I was surprised initially by the sheer amount of discussions as to the functioning of insurance markets in mercantile correspondence. So in paper, in letters written by a merchant to another in different cities. They really are always asking each other not just the rates, insurance rates, but also how well is the market functioning? How well are rules spelled out? How easy is to insure? How easy is to recover your money in case something goes not very well, and so on and so forth. So there is a clear pressure there. Whether or not individual merchants, individual insurers would realize that they needed to adapt such and such rules or to refine them, of course, is a totally other matter. But you do see strong competition between markets. The problem, of course, is that market is too abstract a concept, so it really doesn't help. So you can see this competition, but having said that, it doesn't really help to solve the puzzle.
And could I just real quick, just a follow up on three small points, and it really comes again to I think a suggestion that Peter was making, which is the correspondence between the theory or what's written down and how people are actually transacting this business in practice. And the three I have is that number one, in 1570, I think Philip II made life insurance in the Low Countries illegal, yet there it is in the Antwerp Code. So, what's going on there? Number two, earlier authors were sort of threw up hands about, well, what fraction of the total insurance business is actually being, is going through this Chamber of Insurances, and has your work allowed you to shed any light on that? And number three, you make a remark about the fact that the English market, the English insurance seems not to be very involved in these ransom insurances, which is remarkable given that, I think in the 1630s, there were Barbary raids on both, I think, Cornwall and on Southern Ireland, capturing people, taking whole communities and selling them into slavery in North Africa. So, what is, I mean, maybe it wasn't going through the Chamber of Assurances, but was the fact that ransom insurance isn't talked about in the code, can one reasonably infer that it's not being transacted? Yeah, those three.
Yeah, thank you. So prohibition of life insurance an insurance at all, actually. 1569, Philip II issues a new placard, so a new set of bylaws, basically, in which this is prohibited. But they actually they are one of the keys for the success of the ordinances of the Spanish consulate, because what is prohibited is for people at large, but not to the Spanish consulate, which manages to get an exemption, I should say, rather, an exemption from that prohibition. So actually, for a short while, because then it was too unpopular a decision, draconian a decision, even for Philip II, which is something remarkable. So he had to actually change plans very quickly. But for a short time, the only way you had to insure in modern day Belgium was actually via the Spanish consulate in Bruges. So actually it increased its success instead of being an obstacle to it. As to the amount of basically money, we don't really know enough. At least there is not enough evidence. I tried to do some modeling based on the numbers that we have of the policies. Basically, each policy was registered and kept in a registered book. We have the number for the length of these policies and the number of some of the folios, so of the pages basically within this register. My reckoning is that the volume of business that was being transacted was half the volume of business you had in Renaissance Florence, because they also had a similar system, a register book, and so on and so forth. Now, if you think that Florence in the 1530s was really, really way wealthier than London, all in all, the answer is enough in terms of transactions, not an enormous amount of transactions, but given the size of London market in the middle or in the 70s and the 80s of the 16th century, it was working well enough. Not everybody was willing to register, because you had to pay, of course, to register your policy. So some people were trying to avoid it, but it seems the majority of policies were going through this process, at least for a few decades. As to ransom insurance, that's a very good question. I don't have any evidence about ransom. For the 16th century, though, I think we don't really have a lot of, well, we have some, even some accounts of even in some books printed in England of Christians being held captive in Africa, as they called it, which was any province in which Muslims would rule. They would call it in Africa, in the African coasts. But I mean, really, ransom insurance was a very big market for Spain, especially for Italy during this period, not really for England. I can only imagine, but really, evidence is not enough to support any strong claim. I would imagine that ransom insurance begins to be used in England only during the 17th century. It's true that we have, during the second half of the 16th century, quite a few ships, English ships, enter the Mediterranean, so you should have some ransom insurance. But if they do use ransom insurance, it's more likely that they are using some of the Mediterranean markets to insure against a case of ransom, rather than insuring in London. At least I've never seen any, not just any policy, but any reference to it during the 16th century at all in England.